So this is the every investor must watch part 2. I promised you guys an office tour. So this is the third office of experience. Personally, I love this office because there's a lot of emotions attached to this office. It's not just a typical, you get a commercial fit out done. And that's personally, I believe, how business should be done. Business has to be personal. My clients know that it's not just they're not just clients. You develop that bond with them, the relationship with them. Hence, that's why I'm not able to get across to a lot of clients, because with each and every client, I'm so vested. I wouldn't say emotionally, but it's a relationship. So that a lot of that has been sort of portrayed, or you will understand once clients come to this office, they'll understand that it's not just another real estate office. Every single thing is personal. Like, I mean, look at those bulbs. To the extent, small things. Everything has been hand-picked, hand-chosen. This will be filled green. So the areas for, like, if someone wants to just sit on a bar stool, have a cup of coffee, they could. Or sit on a chair, they can. That one screen has been personally imported from Hong Kong to just fit that wall. You should look at that screen. I think that's probably one of the most expensive objects of this office. And over there we had a little train, a little train-like setup. If someone just wants to have a discussion, a Zoom call, have a little. So it's the model of a European train. I really enjoy this corner. There's a meditation room as well. I think that's really important in real estate. You need to at times just find your chi. Experience. We have a bar. I wouldn't say the bar, a coffee bar. The coffee bar. Now, let's get to business. Yeah. Enough of the office tour. Maybe if you need a full detailed office tour, let me know. I'll post a video. But now let's get into business. I want to discuss numbers, our Excel sheets. So what I like about today's video is that, we're going to discuss every possible option. There's off plan, there's a post handover payment plan, there's ready where you can get a mortgage, a distant off plan, 8-year payment plan. So we've covered everything. I'm the best part of the office. So from here I can see it all. I can see Burj Al Arab, Burj Khalifa, pool, park, we've got all kinds of views over here. I'm not going to do it on the screen because my IT guys haven't set things up. So we'll eventually have like our videos on the big screen, small screen, but the IT setup is still going on. So today I'm going to just present it on my iPad laptop. So let's just go through the numbers. So what I like about this video is that these 6 options, they sort of define fundamentals of any investor that enters the market, because this is how you should analyze any investment. What's the price? What's the price per square foot? Why is it in JVC around 1,100? Why are you getting it at 900 in JVC? Why is it 2,200 in, let's say, a Sobha and Emaar? What's the difference? So we'll understand the difference in the ROE. So let's just start. So my first option is Oxford by Iman. Now, Iman developers, the price per square foot is 1112. Let's say between 1,100 to 1,200 dirham per square foot. It is on the higher margin in JVC, because in JVC you can get properties from 800 dirhams to 1,200 dirham per square foot. But Iman has a clean, good track record. If you study the Oxford residences, they've launched a couple of projects, but all of their projects are doing very successful. What does very successful mean? Means at off plan, if I bought it at 1,100 dirham per square foot, when I sell it, so off plan, if I bought it at 850,000 dirhams, when it's ready, I will be able to sell it between 1 and 1.1 million dirhams, purely because of quality. Now, this is extremely hard in JVC, because in JVC, there's an oversupply of stock. So one investor once asked me, hey buddy, I bought a couple of units in Bengati. Can I sell it on a profit? I said, no, you get good ROIs, but you cannot get appreciation, because in a singular project of Bengati, there are 2,001 beds. There's nothing different, there's nothing unique about your property. There's an oversupply, you cannot get profit. So in areas like JVC, you have to be very picky. And Ellington does make profit, and Iman can make profit purely based on previous track record, quality they actually spend on the product. Now, quickly running through the Oxford, it's a 50-50 payment plan. Means 50% up to handover, 50% on handover. Handover is in Q4 2025. We can achieve an ROI of 14%, and we can achieve in rental. Why I'm saying 30% is considering the balance 50% we mortgage it through a bank. So these are approximate figures, guys. Once we sit down, we'll further break down on the inflation rates, service charges we'll get, but I'm giving you approximate figures to understand investments. For example, in this one sheet, you'll find not everyone has an ROE. Neither not everyone has an ROE on capital appreciation. So these discussions, of course, we need to sit down, break down, but I need all the investors to get a rough idea on where to invest. What is your investment appetite? So in this one case of Iman, you're looking at an investment of 425,000 in a span of up to 2025. That is that your appetite? Next product is by Meteor Developers, a product called Park Central. Now this post handover, you've got 3 years. Now, and the handover is earlier as well, and the price per square foot is less. So this is great, right? You've got lesser price per square foot, post handover for 3 years. This entire building, 7 Park Central, it has only 1 beds. Now, I'll be completely honest with you. When it comes to certain private developers, maybe the quality is not optimal, but it depends on you, right? Some investors are like, okay, you know what? It's not about the quality of the product. It's purely based on ROI, and I need a place to park my funds better than it lying in my bank account. Let it lie in an investment. So I believe in being honest with you guys. So this is made, some products don't have the best quality. I'm not trying to put down any developer. Some developers don't have. It is fairly priced. Now, I wouldn't say the same thing about an Azizi in Azizi Riviera or the Azizi Maidan. I think it's too overpriced. What happens when a product, you buy it overpriced, on handover, your value drops. So you need to understand the price per square foot and demand and supply. Demand and supply. So the demand supply, it's like 8,000 apartments. It doesn't make sense. Over here, the demand supply is okay. JVC, the price is not bad. 900 dirham per square foot means I can achieve an ROI of 11%, which is not bad. The monthly rental in Oxford will be higher in comparison to a Park Central because it just looks nicer. You know, the quality is, so you get, of course, when the quality is higher, you can increase the price. So on a Bengati standard, you can achieve with consistent effort around 8,000 a month, you know, so in JVC. So next comes to Nabni Avenue 4. I've made several videos on Nabni. It makes sense because bang on front of the metro, phenomenal building, phenomenal quality. It's a good investment. Now for me, oh my God, the other day I went to Expo. I'm going to make an entire season Expo. I really underestimate the Expo City, but it's such a beautiful property that I want to make an entire video series on Expo City. We'll be doing that next. Again, phenomenal investment opportunity. Here, that's why I need to enjoy the product. I cannot sell something that I don't find beautiful myself. Investment is personal, right? And now you can challenge me by saying, oh, you know what, something that may be nice for you may not be nice for somebody else. I agree, but I have 15 years of experience, so I kind of know what works in the market and what does not. So Nabni, another advantage is 20/80. So we can do a bit of a leverage game, but you have to invest around 20% up to handover, 80% we can mortgage it. So that makes sense for some investors, but they can do a bit of leverage trading because you have the opportunity to make a good ROE on your capital appreciation. In this case, I've put it as TBD, to be decided. That's when we sit down and discuss. I can explain what kind of returns you can expect on a Nabni. But this is again a very good option of people who want to take advantage of the bullish market. You book your investment at the current price. It's stocks, right? You book it on the current prices. The market is bullish. On handover, you make your investment return because the property is phenomenal. Now, next we're going to discuss Onyx. Now, Onyx is a building in Maidan. It's right next to a building by Azizi, and Azizi is selling it at close to 2,200 dirham per square foot. We're getting this product at 1,500 dirham per square foot. So we straight hit an advantage right there. It's ready. So if someone's looking for an option that's ready to move in, decent quality, good location, very central, close to downtown, Onyx is an option for you. It's just standard monthly rental. There's no ROE over here. There's no return in equity because you're just buying ready property, put it on rental, and that's it. So next is we're going to discuss Sobha and Emaar. I want to get to this actually. So Sobha, there's a 330 Riverside Crescent. 1.1 million. There's so much of hue and cry on, oh, it's only 1.1 million. It's only 1.1 million because it's only 500 square foot. See, guys, you cannot invest in a bad floor plan. 500 square foot. See, I'm telling it outright out there because developers have to stop doing this. See, because it prevents good developers from building healthy products. I think a one bed should be minimum 700 to 750 square foot minimum. A two bed should be minimum 1,300 square foot. A three bed should be at least close to 2,000 square foot, and then you can get a decent size. And that's what the investors, the new crowd that's coming to Dubai, that's what they need. So, the difference. So the pricing is similar. The price point is similar. It's around 2,200 dirham per square foot. Payment plan is slightly different. Sobha is 80-20. Emaar is 90-10. Handover is very similar, both in 2027, but you get a higher possibility for an ROE and ROI in Dubai Creek Harbour because Emaar is building one of the most phenomenal communities in Dubai in Creek Harbour. All my investors who have lived in the Creek Harbour have gone bonkers about it. They love the community. I know celebrities that live there. If you've not been to Creek Harbour, you have to book a room at the address or the Vida and stay there for 3 nights, and you know why I'm talking so much about Dubai Creek Harbour. It is the next big thing. And then of course you have the Golden Belt, which I will discuss about in another video. So this gives you an idea. So we've discussed JVC, Furjan, Maidan, Sobha Heartland, and Dubai Creek Harbour. So you understand. So I have shared the Excel sheet. You get an idea of what the ROIs are, what the potential ROEs are. When I say TBD, means we will have to discuss. See, Sobha 1, again, the location, the view will be phenomenal because the quality of construction is phenomenal. Sobha is a contractor. They know their job. The quality of construction is phenomenal. You'll have a beautiful apartment, the beautiful view, but you'll have no communities. Then that's the same problem that Damak faces, right? You'll have this phenomenal standalone building, Paramount Towers. Till date, it's not fully sold out. Till date, how many years? 8 years. It's till date not fully sold out. There's a reason, right? Because you have to invest in a community, in a master plan, and that's going to fetch you your ROE. That's why till date, Emaar communities hold value. Please make thorough due diligence, a thorough analysis before just jumping into an investment. Understand these numbers. So this is how you should analyze any investment. Price per square foot, area, payment plan. Is there a post-handover payment plan? When is the handover? What is the monthly rental possible? What is the ROI? What's the ROE on the rental value? What is the ROE on capital appreciation? When is my exit? So there are, in the ones that I mentioned, ROE, capital appreciation, there are exit points that we can discuss. I've discussed exit points on Creek Harbour in my previous videos, but once we connect, we can discuss exit points. Mostly, the most common exit point is at the time of handover. But in an Emaar community, when there's something big coming up, for example, in that Mina Rashid area, when Seascape comes, when the Dubai Island starts. You know, there are multiple exit points over there. In Dubai Creek Harbour, when they announce about the monument, there's exit points over there. So you need to understand when the metro station is coming in, there's an exit point over there. Etihad monorail. So, you know, you need to analyze that we can sit down, we can analyze. Once we discuss, we can definitely analyze the exit points. I love analyzing, studying, doing a lot of research on every product, so that I'm proud to say that none of my investors have ever lost money because they have a trustworthy consultant who really does his due diligence. So thank you for watching. My next video is going to be on the Golden Belt, and I want to do a full tour. I think that'll be one of my best videos on Expo City. Love the place. It's so beautiful. I did not believe in the product until I went there. I took a complete tour in a buggy, went through the whole city. I want to share my experience with you guys, so I will definitely do that. Thank you for watching. Mohammed Zohaib. Experience the experience.